Okay, very well. Here we are again. Welcome back, everybody. And rounding off today's mini conference is Hans-Tino Hansen from Risk Intelligence. Quite a different company from BioExtract, but also a very interesting company. So, Hans, I'm going to hand over to you now.
Thank you very much, Oliver, and thank you for being with you today to be able to do this presentation for you. As already said, it's quite a different matter. I will just give you what I call the CFO slide. See that you have here. And then we go to what is risk intelligence. So what we do is that we deliver security risk assessments and threat assessments to our clients for planning or execution of risk management 24/7, 365, and it's mainly delivered via our cloud-based platform. So what are the threats that we cover? It's basically a range of security threats where we have theft and subsistence crime in the bottom and all the way up to war, number 5, where obviously the war in Ukraine plays a major role at the moment, both directly but also indirectly for security, not only in the Black Sea area, but also in the Middle East, the Eastern Mediterranean, and elsewhere. It's insurgency, it's piracy, it's terrorism, and it's organized crime. So what do we do and how do we deliver our, what is our business model? The main product of ours is the Risk Intelligence System, which is a cloud-based solution consisting of 3 modules, MaRisk, Port Risk, and Land Risk, and I'll get back to that later. It's license-based recurring revenue. It's 12 months paid up front and no possibility to terminate during the period. We have a churn historically between 0 and 2%. Most of that has been good churn. So left maritime, changed business area, merged into a client. We've actually had that with several German companies, shipping companies that are our clients that have actually merged or been acquired by others. Rigmos and IR Schifffahrt are some of the examples. We have, obviously we have costs when we acquire clients through marketing and sales, but we have almost no cost or no resources used on onboarding. It is self-explanatory, and there are video guidance for the users. Increasingly, we are selling our data via API that is mostly to bigger companies and government clients. It is fully scalable, and the marginal cost is actually close to 0. Then we also have intelligence reports that are produced on a weekly, monthly, or quarterly basis. It could be our Northern Black Sea report on the situation in the Black Sea. It could be our Libya report. They are either subscription-based with 3, 6, or 12 months, or they are based on packages of 6 and 12, where a shipping company can buy, for instance, 6, and then they can request the reports when they need them, if they are not calling Libya, for instance, every week. Since it's a PDF report, it's also fully scalable. Then we have our advisory services, which is our consulting arm, where we do the bespoke and semi-bespoke products. This could be specific risk assessments for voyages or for operations in a certain area. It could be other things. These are semi-scalable because some of the reports we do in the same region or the same area, meaning that we can use a lot of the content again and again. Risk Intelligence System and the intelligence reports are about 90%, so the recurring revenue is about 90%, and 10% comes from the advisory services. Very quickly, then I will take you through the intelligence cycle, which is our main procedure. It's also used by government agencies and other companies in our field. You collect from a variety of sources, and I'll get back to that. You verify this information. When it's verified, you use it for your basis on for your analysis. Then you do your assessment. Then it's distributed through the system, and then we get feedback from our clients, and we may change the direction, and then we change the collection somewhat, and then it goes on. That's called the intelligence cycle. If we then look at the engine room of the company, what is the secret sauce, the Coca-Cola recipe of risk intelligence? Then we have a technological platform, and that one can be probably be produced by 20 Indian IT engineers in 2-3 months. And it might even be better, I don't think, because we are launching a new platform in about a month's time. But they cannot produce, a competitor that goes into the market cannot produce or copy the source network that we've developed over 20 years. It's a source network that consists of individuals, organizations, media, journalists. It's also contained by picking up open sources, but a lot of the critical intelligence we get from human sources. I should say that none of these sources are paid. So it's based on a mutual understanding and a relationship over time. So we do not pay our sources. Our clients are very important in this respect because they have about 8,000 to 9,000 vessels around the world, plus offices around the world, and they report in what they see or what they're exposed to. Knowledge has been built up over time, and the same goes for insights. Insights is basically what the knowledge that, for instance, for Nigeria, when there are governor elections or presidential elections run in the run-up time, there are an increase in kidnap for ransom for the election process in the various local areas. If you don't have that insight, you won't pick it up if you come directly from the university or from other line of business. Database we built up from 2007 on the system, and we have in our content management system, we do have data that are older as well. We have our own analysis model, and we got worldwide experience with our staff and with our clients. They are globally operating, and we have the same built-up relationships over time. So this is the secret sauce, and the one that is difficult to copy, which means that the barrier to entry is relatively high. You can claim that you have these things, but actually at the litmus test, you probably won't. Then you can ask, how about human and AI-based intelligence processes? How does that work going forward? We have the first phase of our AI strategy was to launch an enterprise content management system where we simply took all documents from the whole lifetime of risk intelligence and made them fully searchable for AI processes and put them into one system. Then we did a project for our land risk, and I'll get back to what land risk is. But here we have a large number of incident data per year that has been partially automated with automatic ID, for instance, of Google Street View when it's about theft from lorries, trucks in Europe, and automatic entering of these data into final reviewing by an analyst, which has meant that we at that time saved about 1,300 man hours per year. And now it's higher, it's probably 1,800 at the moment. The next phase, we concluded 1 and 2. The next one will be that we are working to integrate all these systems into one process where we can have AI identify trends, patterns, and organizations, network patterns in support of the human element. And the final step, or maybe not the final, but the next one that we planned after that is basically to have an AI-supported analysis process where the solution creates the draft analysis of the subject, supporting the analyst's final analysis and assessment. So a combination of using manpower, resources, and AI to get the most of the data that we already have and the intelligence and information that we collect. If we look at the products, then we have 3 modules as mentioned on the platform: MaRisk, Port Risk, and Land Risk. MaRisk, Port Risk, and Land Risk MaRisk is maritime, Port Risk are ports and terminals, while Land Risk is land-based transportation and security. First, MaRisk and Port Risk are normally offered together to our clients as a maritime solution. It's a security incident updates what happens around the world. It's updated 24/7. We got a duty watch team in European time working 8 hours. Then it moves to North America that have 8 hours in Pacific time. And then we have 8 hours at our office in Singapore meaning that we have to follow the sun principle, 8 hours, 8 hours, and 8 hours. So we have it covered 24/7. We have alerts as well of something that is happening or about to happen or may happen in the near future. We got statistics from our database. We got recommendations and guidance. We have integration of the client's fleet tracking system so they can see their ships on the maps. And we got the API access, as I mentioned. The port risk module looks into the port incidents, also the port data, the security in the ports with risk, vulnerability, and threat assessments. We also have city and country threat assessments. The city is, for instance, when you have changes of crew, then it's good to know about street crime, hijacking, kidnapping, and so on the street level. Guidance about how to get to the airport and similar. And the same goes for port security and emergency information. Land risk is quite of a different creature, especially with land risk logistics that you see here. It is used for planning voyages, routes for trucks, so truck-based transportation. And it's about 8,500 truck parking areas in Europe that have been assessed, plus 250 secure parking areas. And the issue is that when you have planned the route and traffic is hard on A7 due to roadworks or accidents or whatnot, then the truck driver may not be able to reach the secure parking area with his high value load. Therefore, the dispatcher in the company, in example DHL, uses this system to go through the route, look at the risk factors, what are the most secure parking areas that are not secure as such, but are normal parking areas, which have the lowest risk, and then guide him or give him that as an opportunity for the chauffeur. So it's both for planning, but it's also for risk mitigation if something happens along the road. On the maritime side, our clients are operating 15.7% of the world fleet. It's not the same as a 15.7 market share. We have about 6 to 7% because our clients obviously also have other providers, which I would also recommend in that situation. You can see some of them here. We have a number of German clients and have had it for many years. Bernhard Schulte, Colombia, examples, Reederei Nord, Chemical and Sea Transport, Seaborne, and a number of others. Our government clients are 8 NATO countries, including Germany. And in some of these countries, we have up to 3 government clients, organizations, agencies in each country. We have 3 in Germany, as an example. We also have NATO as a client. And the US Navy has integrated our maritime data from Maris and Port Risk into some of their solutions. They are our biggest clients. And you see 2 of our clients here, US Navy and Danish Navy. If we then go to land risk logistics, then we launched the product in October 2019. That was quite unfortunate because when we were going to roll out land risk logistics to the logistics clients and to industrial manufacturing clients, then COVID hit and nobody had any time left or energy to look into new security systems that could change their procedures and improve their security, because they were simply handling not only their own logistics, but everyone else's logistics at the time. So only in end of first half of 2020 last year, 2022, we actually managed to get back into the dialogue with a number of these clients. And the process for getting the big players on board here, while on the maritime side, it normally takes 3 to 4 months to land a client for the lead time, while in this field, it's almost like solution sales, because we need to involve people from IT, from a number of different departments, both on our side, but also on the client side. And it takes up to 12 months. But earlier this year, we signed both DSV and DHL Freight as clients for land risk logistics. And already in December 21, we signed up Sony. So these are our main clients. We also have some smaller clients, but these are the big ones at the moment. So that meant that the whole land risk side, the whole land side for us, actually got postponed 2 to 2.5 years compared to the original plan. Some of our competitors on the maritime side, I've mentioned here, I won't go into details. Some of the wins that we made from some of these competitors are also mentioned. On the land side, we actually don't have any competitors, direct competitors, and which is because we've simply launched an innovative product, which is at the moment unique. I actually normally say I welcome good competition, because good competition is a sign that it's a mature and strong market. Here we have just been first movers, and it will take some time for others to do something similar to what we do. If we then look at our strategy that we launched last year, the 2025 strategy, then the vision is to become the world leader, not only in maritime, but also on land, by air, and in ports all over the world from a security intelligence perspective. We have 5 strategic milestones in the strategy. One was that because of the delay with land risk, we decided to refocus the core business on maritime security, because it was maritime security that paid our bills and gave the growth in 2020, 21, and 22. And so investments, including investments in the new platform that we're launching this year, has been refocused on maritime security after being focused on the land side for the years after our IPO in 2018. The land-based security has been identified as an independent business area where we do invest when we get or can see client revenue. That has already changed, because we did that already with DSV and the DHL, where we actually had investments both from our side but also from the client side in developing new features. But these are features that can be used by others as well, having the same type of structure. So it's partly scalable as well. Land risk logistics will increase over time and will become a much bigger business area for us. And then obviously we will need to look into making investments that are not directly client related as well. We decided last year that we should look into strong commercial partnerships in order to increase our market share, and also to address the markets horizontally and vertically where we haven't been able to do so. We made agreements last year already with SOS International MedAir, which has actually opened a new market to us that we couldn't address before, and that's the luxury market. They have access to 50% of the world's super yachts and 80% of the world's mega yachts globally. We also have an agreement with Navtor from Norway that do navigation and fleet management systems for shipping. And there we are able, with our data integrated in their solutions coming out in 2024, then we can actually address more users within the shipping business. So that means that we can address the market vertically. So that's the number 3 in the strategic milestones. Then our aim in the 2025 strategy is to have an annual year-on-year growth of 30%, leading to 50 million Danish kroner in revenue by 2025, and with a very high percentage, 90% plus of that being recurring revenue by 2025. The target is still 50 million in invoiced revenue, so basically what we've invoiced, while on the reported figures, we will have to see a time lag, because we changed our revenue recognition last year, including 2022, to have full distribution of revenue over the license period, so 12 months. This means that we will have a constant time lag of the growth from what we've invoiced into what is actually reported, which is normal for SSAS-based companies. You can see the model to the right. We also have in our guidance a positive net result from 2024. Originally it was 2023, but that has been moved because of the change of revenue recognition. Then I will actually talk a little bit about some numbers, because we do have guidance. We do have, I should say that our company language is English. We got, I think, 13 different nationalities. All our clients are globally operating companies, so everything is in English, including our financial reports. Our guidance is for 2023 an ARR growth of 15 to 30%, which leads to a system ARR. So that means the system is Maurits, Portage and Landrisk and Landrisk Logistics, of between 18.5 and 20.9 million Danish kroner. A negative EBITDA and negative negative net result, but a net positive cash flow for the year. We did actually change the indication on the cash flow, because we are breaking through the line in Q4, meaning that we will have positive cash flow from operations in Q4, as well as throughout 24 and 25 in the period as we are looking into. If we look into some of the reported numbers from this year, then you can see there are two different types of revenue, as I referred to, both the recognized revenue, where we have full periodization of all recurring revenue, as well as the invoiced revenue. And as you can see, in Q2, we had 14% growth in the recognized revenue, but we actually had 42% increase in invoiced revenue. The same numbers for Q1 was 17% and 43%. So that actually shows a little bit about the time lag that was shown in the graphics earlier. We also had an increase in system ARR, so annual recurring revenue, of 55% and 44% in total ARR in the quarter, compared to 19, respectively 14 for the quarter. We had 15% growth on the recognized revenue for the first 6 months, and 76% on the invoiced revenue, respectively 15 and 13 for system and total ARR in the period. If we then look at the cost structure vis-a-vis the invoiced revenue, and the invoiced revenue is of course interesting, because that's the cash flow where we actually pay our bills. Then you can see in 2022 we have this increase. We have always about 66% of our revenue in the second half of the year, which you can also see from the figure, because that's where we have at the end of Q4 the majority of the calendar year renewals. We expect the same growth as last year, but at a higher level. So the dark blue line is what we have confirmed as of today, while the middle blue line is as per budget. So that means that with the light blue line, which is the costs, then we will actually break through in Q4 if we don't sell anything more as of today, as of 1st of October and onwards, and as of today. Meaning that everything else will be contributing to the middle blue line in the graphics. The organization is already optimized for producing what we need according to the strategy. We may need another analyst and maybe one in the commercial team, but that's basically it. That means that the cost level will be roughly the same, and with the invoice revenue going through the line, then it looks promising for 24 and 25, as already indicated. If we then look at the pipeline, then we have a quite strong maritime pipeline at the moment, with 12 potential new clients in the final decision phase. We do have 6 projects, major projects in the advisory pipeline. We do have an increasing Landrisk Logistics pipeline with 3 potential major clients, plus a range that are in earlier stages. And remember, as I mentioned before, the lead time is maybe 12 months or more. So it takes time for that to come to effect. We've had renewals in Q3, and we've had 0 churn as of today. With DHL, we started with the Benelux business unit, and we got one business unit in northern Germany testing as well. And the idea from DHL is to roll out to the 16 business units in Europe. And they actually put out an internal and to their clients a blog post that there is a link that describes the cooperation between Risk Intelligence and DHL. As mentioned before with the partners, they are coming online in 2024 with the product with Naptor and the product with Medair International SOS. The new platform that we're launching takes us from having one license agreement, basically one revenue stream from license, where it's basically dependent on the number of users and the number of ships operated, to a different type of revenue generating platform where we both have the existing license users, but we can actually tailor make a number of combinations of features or layers or data, and that will lead to a 20% increase. Last time when we launched a new platform, which was in 2015, we had a 24% price increase and no clients ending their relationship because of that. Then the next revenue stream is features against a fee. So we are launching an intelligence-based voice planning tool. We will have sanctions layer and other products, which they will pay an additional fee for the number of users that they need this for. Then we are also integrating third-party data through our partner Geolag that is launching or producing the platform with us, which means that we will get a fee for the data that our clients will buy from these. So 3 revenue streams instead of 1. Then we are just in the middle of a process leading to a rights issue, and it's just for information because it's a rights issue, meaning that it's for obviously shareholders. And we have guaranteed 13.8 or 9 million out of the 18.5, and the public subscription period for the shareholders will take place from 11th to 24th of October. We also will get a loan from the Danish government growth fund called Vækstfonden. We had one old one that will be, the last installment will be repaid on the 1st of October. And we have one from 2020. And these are on reasonably good, or should I say, favorable terms, and are long-term loans of minimum 5 to 6 years. And in addition, looking into Q4 and positive liquidity from operations, this provides a relatively good platform for us, where we can reestablish our equity. We will remove all short-term debt. We have financed our investments in the new platform, which, as you saw, will be a main driver for growth. And we will have no need for further capital increases in the 2025 strategy, unless something strategic happens on a strategic opportunity, because the positive liquidity from operations will, during 2024, turn into positive EBITDA and ultimately profit. So it will create a foundation for fully scalable growth with the initiatives that I mentioned, the strategy and the funding. Thank you very much for listening.
Okay, thank you very much, Hans. Very exciting. Have you ever been compared to CIA or MI5?
Yeah, I mean, we are basically a private intelligence company. So we've heard the kind of comparison quite a few times. And we also be called 007 and other things. But obviously, we are not covert in that way. We are quite open.
Yeah, and Mrs. Moneypenny is not sitting behind that door.
Mm.
Okay, the one thing I was thinking when you were talking about your business is, do actually insurers take into account when clients use your systems? Because I could imagine, for example, if a truck doesn't put the valuable freight at risk in funny parking spaces, it should make insurance cheaper, no?
The problem is with, if we take landside transportation and cargo theft as one, the problem is that we're talking about tens of thousands of incidents per year in Europe. In Germany alone, according to a study made by 13 industry associations, the loss is more than 2.2 billion euros from cargo theft. And this is underreported, so this is not even the correct number. And in Europe, the European Parliament has made a report stating that it's 8.2 billion for Europe, or rather the European Union, which is also way too low. The issue is that it is medium probability but low impact. It means that none of these individual incidents has an impact that will change anything, and everything is insured. But we are talking to some of the main insurers in London, because we have them on the maritime side, into actually using this as guidance. We are also talking to a number of manufacturers. Sony is one, already a client, but others that will use this as a tool to put demands on their logistics providers. So their trucking providers, they don't have their trucks themselves. They always, use DHL or others to produce, to move their goods, and in that way put pressure on the logistic chain to improve security and thereby reduce insurance rates. So it's all linked together. On the maritime side, it is low probability but high impact, meaning that the losses from an individual incident can be very high, many millions of dollars. Therefore, we work very closely with. We got many of the syndicates in Lloyd's in London. We have some of the big war risk mutuals that do war risk. So we talk to them on a daily basis about the situation in the Black Sea, for instance. We have had clients, vessels that have come out of ports in Ukraine, both this year, but also earlier this year. We've had crews that we've assisted, or we've been coordinating extraction. Not that that's not our business, but we've done it for free. And then companies that do these things have done the actual thing. But we helped last year in March to get crews out of Ukrainian ports. So we work closely with the insurance industry, and we also do significant work for law firms on behalf of the insurers about cases for different matters. So it's a little bit different from maritime to land-based, but it is something that is changing. And a company like DHL has actually changed procedures because of the access to the new solution with land-based logistics. And that's what they're writing about in the blog post.
Okay, we actually have a couple of questions in the chat. So the first one is, I think that actually refers to the land side. How come that you don't have any competition on the land side? I believe land side was where you have no competition.
Yeah, we do have competition on the maritime side, especially what is compared to Maersk. There are a number of competitors. Some do a little bit of port risk, none have exactly what's in port risk. On the land side, it is simply because we've been first movers. It's also because the land-based logistics business has been very traditional, very conservative, and has actually not employed, you could say, technology and the intelligence process that we have to reduce losses. So that's a relatively new thing, which also means that it has not been necessarily a highly profitable area to invest in. And you can see just ourselves now, it was mainly because of COVID, but we hadn't had profit from the land side yet. We will have that soon, but it just means that it hasn't been looked upon as a sexy area. We've just bitten the sour apple and just continued marching on, doing what we actually thought was the right thing. And we worked together with Sony, for instance, during COVID, so that actually was good that we spent some of the time improving the product. We've improved it with DHL, and we improved it with DSV. There will be competitors, and as I said earlier, I actually welcome competition.
Next question is, who is your largest customer? Who are your largest customers? Is there any cluster risk? Maybe from my side, can you provide a split between maybe government customers and private clients?
Yeah, our largest client is US Defense. And we have a 5-year contract of about $1.7 million. So that's the biggest client we have. But as such, the government sector is probably only 10-15% of our business, while maritime at the moment is almost the rest. So shipping, offshore, energy, oil and gas, all these types of companies and organizations. And the ARPU is 151,000 or 155,000 so the average revenue per unit, not included advisory services, but only the recurring revenue, meaning that most of our clients actually has a revenue of about 150,000, meaning that one loss or two losses we can deal with, and we don't have the risk of losing an industry or one big client and we will go down.
So how do the clients decide which intelligence provider to choose? So when do they choose risk intelligence, and when would they rather go for another provider?
They listen to each other. So we've had a German tanker company becoming a client because Shell told them that would be a very good idea, because Shell uses risk intelligence at a meeting. So they listen to each other, not necessarily like in a directive, but they ask each other and hear. And none of our competitors have these government clients that we have, which is a sort of a stamp of approval from the government sector that we actually deliver quality. We never competed on price. So the ones that go down a price route, we just said, sorry, you will have to find another provider. So we have said no to, basically said no. We basically moved ourselves out because of pricing, but in the long run, we can see that quality wins in this matter, because it's more important to have quality data and intelligence than having a lower cost.
Yeah, maybe a little bit related to that, there's a question, can you shed some light on the competitive landscape?
Yeah, the competitive landscape is basically 2, 3, 4 of our size, or rather a couple of them are smaller. And then some 2 others are the intelligence department of security companies, Control Risk, for instance, and Ambrey. So they actually have, the company has their main business in a different but associated field, but have this as a department. So actually they have in principle access to more capital, more resources and so on than us, while we are a front runner among the smaller ones or medium-sized ones, you can say, in this market when it comes to the maritime side.
And I mean, is there a risk that your data gets stolen by competition or basically shared by customers with somebody who's not paying?
Yeah, obviously there is, because you cannot secure that information is not shared. It's impossible. However, we won 3 legal cases against companies that copied our data. On an individual level, that's difficult, because if I get our Libya report, I send it to you and you send it to your brother or your cousin, I cannot control that. But the moment that it goes into a business situation where data is used and we can see that it's our data, then we do it, and we won 3 cases like that.
Very good. There's another question, basically more to the long term. So if you look 10 years further down the line, what kind of revenue potential do you see for your company, and what kind of margins, considering the steady state? So not the 30% growth rate you're showing now, but maybe if you're full size.
I already talked about 2025, and without shedding too many secrets, I can say that the EBITDA is quite interesting in the later part of the period, and that goes by, it's quite logical when you look at the cost structure and the projected growth structure. If we look 10 years down the road, we believe that the land side will actually increase to a similar size to the maritime, or even surpass, or most likely will surpass the maritime. The total available market, so TAM, is about, at the moment, 500 million on the maritime side, Danish kroner, while it's somewhere between 600 million and 1 billion Danish kroner on the land side. And that will increase, especially as the land side trucking market, cargo market, actually becomes more mature and use technology more and more, just like shipping has done. Shipping, when we started, was very conservative and not very technical oriented, I can surely say. And we were the first one that launched a product like ours. So it takes time, but in 10 years, I believe that the land side will be same size or substantially bigger than the maritime. And then we will have quite interesting margins as well.
And do you have any further ideas of new product rollouts? Like you now have maritime, port, and land or trucks.
Yes, actually in our vision also to address the air cargo side as well. That is, we've stayed out of cyber because we see cyber as an kind of a specialist area where we do treat cyber when we do risk assessments, but we talk about cyber as a tactics for other means. So to get access to a company, get their information or similar, while the companies that are specialists on cybersecurity, they are so because they only do that. So we actually believe that until we can buy such a company, that's also an opportunity in the future, then we will stay out of that and refer to others if they want to talk about cyber, because we are not specialists on cyber. However, in the process, I should say that in 2012, we started thinking about ports, and we were not specialists on ports. So I acquired a port security specialist company. So it's not that far from the same process.
Okay, maybe a little bit of a silly question, but could you also imagine doing a retail product? So if I go on holidays and visit a city, I get an overlay on Google Maps where not to go because I get mugged?
I mean, I wouldn't exclude it, but there are companies that are experts in travel security, and they would be much more prone to deliver these kinds of things because the travel security for corporate and holiday is much closer to each other than what we do. The threats to a truck on a highway, a motorway in Germany or in Romania or somewhere is substantially different from the threat to a private individual, because they're not after the private individual, they are after the truckload of Sony flat screens or diapers or pharma or high value luxury goods or similar. So it's very, very different picture.
Understood.
I would say that the exception to the rule is obviously the high end of the market with the super yachts and the mega yachts, because they are private. Of course, these are very, very, very high net worth individuals. So they also, by definition, have a different risk profile that a normal Danish or German family would have.
Understood. So I think we've actually answered all current questions in the chat. So we're almost out of time, 1 more minute. So if there's any last question, you can go ahead now. Let's just wait 10, 15 seconds if there's anything left to ask. I don't think so. Nothing coming up. Okay, very well. I think we've answered all questions. So Hans, thanks a lot. Highly interesting business model, very interesting presentation.
Thank you.
And I'll just hand over to you for a few last words. And maybe before that, just thank you for everybody attending, because this finalizes then our mini conference on Nordic growth companies for today. So over to you, Hans, for a final word.
Yes, I would like to thank you for hosting this today. I would also say that I'm looking forward to having German investors. I've had German friends that tried to participate in our IPO, which was nearly impossible in 2018. But now when Spotlight is going back to the Nasdaq platform, I think early January or late December, it will actually become easier to invest not only in us, but in other companies and I hope that we will see some interest in the future, because our business model, our company, the way what we do is actually international by definition, and not related necessarily to Denmark.
Great, thank you.